All right, let's break down one of the most successful investing philosophies of all time, Warren Buffett's. And here's the thing. It seems incredibly simple on the surface, but its real genius lies in one fundamental shift in how you think.
It all kicks off with this legendary quote. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Now that might sound like a catchy little phrase, but Buffett is dead serious. What he really means is if you get into the habit of buying things for way less than they're actually worth, you build this amazing fundamental protection against loss right into your strategy.
So you have to wonder, right? In a world with markets bouncing all over the place, how is that even possible? Well, the answer isn't in some complicated algorithm or a secret formula. It's in a totally different way of thinking.
And that brings us to the first big idea. It's all about mindset over math. Buffett insists that the single most important quality for a successful investor has almost nothing to do with being a genius.
I mean, listen to the man himself. He says it's a temperamental quality. You don't need some sky-high IQ to win at this game. You just need to be smart enough to understand the business you're looking at. The real secret weapon is something else entirely.
So what is this right temperament? Well, it's not about being the smartest person in the room. It's about having a stable personality. It's about having the guts to think for yourself instead of just following the herd. Buffett says, investing is a game where you think, not one where you take polls. You can't be the kind of person who needs other people to agree with you. You have to be emotionally detached from the crowd.
And here's the bedrock of that idea. You are right because your facts are solid and your reasoning is sound. Full stop. It doesn't matter one bit if 1,000 people agree with you, and it really doesn't matter if 1,000 people disagree.
Okay, so this independent mindset leads us straight to the central aha moment in Buffett's entire philosophy. This is the big one, the shift that changes everything. You have to start thinking about owning businesses, not just trading stocks. Buffett points out that the single biggest mistake most investors make, even the pros, is that they get completely obsessed with what a stock price is going to do tomorrow or next week. They're not actually thinking like they own a piece of the company. To them, it's just a little ticker symbol blinking on a screen.
So how do you know if you're really thinking like an owner? Ask yourself this really powerful question. We'll call it the 5-year test. If you bought a stock today, and then you found out the stock market was going to shut down completely for the next 5 years, would you be comfortable? If your answer is yes, then you actually have confidence in the business itself. If the answer is no, you're just gambling on the price.
And this is how Buffett actually forces himself to think like a business owner. It's a really disciplined 3-step process. First, you analyze the business, its earnings, its future, all of it, to figure out what it's truly worth. And here's the key. You do this without looking at the stock price. Don't let the market's opinion color your own judgment. Only after you've done your homework and come up with a number, then you look at the price and see if it's on sale.
This whole idea leads us right into the next critical piece of the puzzle, patience. And Buffett explains this with what is honestly one of my favorite analogies ever, and it's all about waiting for the perfect pitch.
And here it is, the key to the entire metaphor. In the world of investing, there are no called strikes. See, unlike in baseball, nobody can force you out of the game just for not swinging. Just picture it. The market is the pitcher. And every single day, it's just hurling thousands of opportunities at you. General Motors at 68, U.S. Steel at 25. They just keep coming.
And that's you. You're the batter, standing at the plate, just watching all these pitches fly by.
But here's the secret weapon. You never, ever have to swing. You can let thousands and thousands of pitches go right on by, and there's no penalty. You can just stand there and wait.
You wait for a pitch that's right in what Buffett calls your circle of competence. All that means is you only swing at businesses you actually truly understand. You know, Buffett famously missed the entire tech boom. Didn't matter. He'll tell you he has no idea what cocoa beans are going to do next year. Doesn't matter. You just wait patiently for that one perfect pitch, right in your sweet spot, the one you understand completely, and then you swing for the fences.
Now, keeping up that kind of discipline and patience is really, really hard. And that's exactly why your environment is so critical. Think about it. There's a reason Warren Buffett doesn't live on Wall Street. He lives in Omaha, Nebraska.
And Buffett is incredibly clear about why. He says Wall Street is just an environment of constant overstimulation. You've got people whispering ideas and rumors in your ear all day long, and all that noise creates a short-term focus, which, as he says, is just not good for making long-term profits.
I mean, the contrast couldn't be more stark, could it?
Wall Street is all about stimulation, noise, and short-term bets. Omaha is about facts, it's quiet, it gives you the space for independent thought, and helps you keep that long-term perspective you need to be a true business owner.
So the takeaway here is really simple. Investing is an intellectual process, and the less static, the less noise you have messing with that process, the better your results are going to be.
Okay, so this all sounds so simple, right? So logical. Which, of course, brings up the million-dollar question. If it's this straightforward, why isn't everybody doing it and getting filthy rich?
Well, Buffett explains this with a fantastic analogy. He says academics and people in finance, they're trained to use all these incredibly complex tools. And once you have that hammer, well, every problem starts to look like a nail. They feel like they have to use their complicated skills, even when a much simpler approach would work way better.
So, when you boil it down, here are the big hurdles. First off, let's be honest, it's boring. Waiting for that perfect pitch is tough for people who want action. Second, there's a ton of pressure. If you're a professional money manager, your clients are in the stands yelling, "Swing, you bum." They want to see you doing something. Then you have that complexity bias we just talked about, which leads to the final fatal flaw. People end up analyzing stocks, not valuing businesses.
And that brings us right back to where we started. This game isn't about IQ points or fancy financial models, it's about your mindset. So the real question to take away from all this is one you have to ask yourself. Forget the math for a second and just look inward. Do you have the stability, the independence, and the patience? Do you have the temperament to play the game Buffett's way?